Hi everybody, this is the Sentiment Timing weekly video recap for Tuesday, July 21st, 2015. So I'm going to go over a few things in the video and really just talk about what, as a trader, what you really want from a service, there's thousands of them out there, but the main thing that I would really want to get the point across would be just getting an unfair advantage over other traders. And there's a number of different ways that people use. Some of them have automated trading. Some use Elliott Wave. Some use the astrology. Who knows? They're all there. Some of them are really, really good. What we do, we have three different types of say, indicators that we're able to use to give our members a good idea as far as what is going on. And one of them, obviously, is the Woody's technical turn date indicator that projects when turns are going to be happening. And as you can see, he's pretty spot on. But there's also times that they're not going to work. And the drop that we were, I'm going to go to the regular charts. This drop right here, we were not anticipating this to make the low here. It was going out until July 15th, and then there's another upcoming turn date that's coming that it's for members only right now. But in any case, that's when it was the projected low that we were looking for. So that did not work. But notice this: when we were down here, we had a 1% bullish reading on it. So as much as the turn date wasn't due until here, the 1% bullish was giving us a warning: don't get aggressive on the short side. And if we go back to those charts again, notice that we also had bullish divergences on a technical aspect here. So when it was here, we had the 1% bullish reading, we had a bullish divergences, and we were warning to expect some kind of bounce. Now, this is the bounce that we did not anticipate because we were looking for the low to come here. But again, it wasn't, even though the turn date wasn't here, it wasn't until here, we had the 1% bullish reading. So everybody was bearish on the markets. We had bullish divergences, and we had a double bottom. So we were more looking for where to short the market up here. But obviously, went the gap ups, it went a lot higher than we anticipated. So last week, I had said that we didn't really have any important turns that were in place. Sentiment wasn't really giving us a whole lot of information, but being we had some bearish divergences on the 15-minute chart to anticipate a little bit of a pullback, and we got an 11-point drop, and it went up. But what I had also said was, if we do make new highs off of that, what's going to happen is we are going to get some bearish divergences, and they're going to be even larger than what was on the 15-minute chart, and from there, that is exactly what's playing out. So we have now have 90% bullish readings, so everybody's again bullish on the markets. Now, again, the technical turn date isn't, we don't have anything. We have one that's pending in in the next few days, but the larger one isn't anticipated for a little bit of time. So we want to follow what the sentiment is reading, because the turn dates they got a little whacked out with the plunge here and the 1% bullish reading where everybody was bearish, and it's so the timing part of it got messed up. So now we work on our sentiment as well as our technical indicators. And if you notice on this was from our yesterday's report that we did, that we had a 90% bullish reading. We had the wave count as well as bullish divergences that continue to look for some type of pullback. So when the mainstream media was talking about the new all-time highs and we're right here, we were warning that to expect some type of pullback, and that the risk is on the short term is on the bulls. And today we actually saw a reaction to that. So the reason why we were looking for that, or I was looking for that in that particular piece, was we had everybody that was bullish on the market. Nobody was really bearish. It was very boring. On top of that, we had 1, 2, 3, 4, 5. Now, for your non-wave counters, what it means after you get 5 waves and you have the bearish divergences, you're typically going to retrace anywhere from 50 to 78% of the move. So this is why we were saying not to be buying into the the breakout to new highs. And one of the things that Woody has been saying is that even though we've had a very large bounce off of these lows here, that it wasn't going to be a sustained or, say, a new bull leg in the market, and that there's a much larger drop that is going to be pending, and it is going to be a black hole event. Now, the black hole event was something that we were saying was not really set until later into the third quarter. So this drop may end was actually, we were looking for it to make some type of low off of a panic low. But what happened was we got just a 1% low, and we rallied off of it. So now we're going back to where the original black hole date is that that Woody's been predicting. And again, the last one that he predicted was September, and it was a month before, and we saw the S&P drop 200 points. Well, there's another one that's pending, and that's what he's going to be eyeing down once we get into August. It's getting a lot closer to the date that he was actually looking for it. And what we're going to do is just follow sentiment, follow regular technical indicators, and until we get that larger drop and the markets get back into a normal phase instead of these massive gap ups, when things get extended, we're going to be looking for the drop, and we'll let our subscribers know that. When we get the very low bullish readings or everyone's bearish on the markets, as long as the technical indicators are supporting it, then we'll be looking for a bounce. So right now, what I would be, just because we have the pretty extended bearish divergences, you have the 5 waves up, what I'd be looking for is, if you're looking to buy, you'd be looking anywhere from these pivots here: 2099, 2088, 2078, and 2063. Now remember, we have a gap that's right here, right around that 2078, so that makes sense. We also have a gap that's right here at the at 2108. So there's a chance that these gaps are going to get filled before the bulls try again. But right now, just based off of the very bullish sentiment and the technical aspect of things, you don't really want to be chasing the long side. You want to actually be looking for a pullback that's going to be a little deeper than what we have seen so far. So with that, I am keeping the the same thing with the markets path. I've had a lot of people sending me emails saying they like it a lot, and basically it's a video like this that I do, but it's each night, and it goes over, it's on a technical aspect. I really don't do anything to do with the sentiment timing aspect. This is just technical, and I go over IWM and the S&P every night, give morning notes out, and just trades that I'm making via email. So anybody that decides that they want to subscribe to Sentiment Timing, you just send me an email here, and I would get you set up with the markets path. So right now, again, just a very, very quick recap. Sentiment is pretty high. We have we should be getting a larger pullback than what we've seen so far, so I'd be a little careful and selective on where you're going to be looking to buy the dips, because this market's moving very, very fast, and it's catching a lot of people on the wrong side. So until next week, enjoy your trading and have a great night.